Alright, so after having recorded about 7 minutes worth of information available to you, I realized I didn't press record on the camera. So here's going again. In this video, I'll be talking about the deadlines for tax, the tax season in 2023, when it starts, what's happening, as well as the documents that you might need to submit your personal income tax. Welcome to JJT Accounting Services, or JJT Accountants and Auditors. I'm still used to saying Practitioner Accounting Services. But anyway, tonight, as of the date of this recording, today is the 7th of July 2023, and as of tonight at 8 o'clock, tax season for individuals start. Right, that means individuals can now submit your 2023 income tax return as of tonight. The implication of that means that quite likely tonight at 8 o'clock, e-filing is going to crash up until, for about an hour or an hour and a half or something, and then maybe in all likelihood on Monday, Tuesday, and Wednesday, and then, So if you want to submit tonight, go ahead, feel free to do that. Please bear in mind that I expect e-filing to be a little bit slow, quite simply because of the vast volumes of people that want to submit their taxes. This is expectation. This isn't necessarily what is going to happen. Right, so what does tax season mean? Tax season for individuals means you now have the opportunity to submit your tax return to SARS. For individuals who are not provisional taxpayers, the first deadline for you to submit your income tax return to SARS for 2023 is the 13th of October 2023. And if you are indeed a provisional taxpayer, I forget the exact date, but your deadline is in January. And for companies with a February year end, in all likelihood, that deadline is in February. But as I've said that, the deadlines will be put in a comment here, exactly, specifically just above my head somewhere, what exactly those deadline dates are. All right. So in the last week, from about the 1st of July up until today, there's been quite a number of automatic assessments that's been issued by SARS. And these automatic assessments, SARS issues based off the information from third parties. So your employer submits your RP5 to SARS. SARS uses that. The banks, third parties, medical aids, retirement annuities, pension funds, provident funds, investment houses, all these places submit certain information to SARS throughout the year, usually by the end of May. And so SARS now has implemented a system where they automatically collate all of that information, and if there's no big change, then they've done most of the work already. And that's where the automatic assessments come from. So in the last week or so, SARS has gone completely ballistic, and pretty much every second person has received an automatic assessment. As of tonight at 8 o'clock, you can actually choose to amend your tax return. You can decline the assessment. However, if you were automatically assessed earlier in this week, chances are that you might have already received your refund. If you make an amendment and it changes in such a way that you actually have to make a payment in, or at the end of the assessment or the actual submission of your return, you need to have a reduced refund, you will have to refund that the difference and the balance to SARS. So just bear in mind, don't spend the money. You might have to pay back a portion of that if you intend on accepting the automatic assessments. So one thing to note about the automatic assessments is that there's this thing in taxes, in the tax law, where they talk about the onus being on the taxpayer to ensure accurate submissions and accurate returns. So your automatic assessment, you as the taxpayer have the responsibility to review your automatic assessment to make sure it is accurate and correct. Because even if SARS pays you out 100,000 rands of a refund, and in fact you were supposed to make a payment in, or whatever the case might be, SARS does have the power to take legal action against you. So please make very certain about your automatic assessments. Simply stating the argument that SARS has issued this automatic assessment, that is not a strong enough argument. The onus remains on you. In other words, the responsibility remains on you as the taxpayer. So please make sure that you do a proper review of the automatic assessments if you have been automatically assessed. If you have not been automatically assessed, do not worry about that too much. For you simply start with preparing your tax return tonight or in the next week or 2 or 3. You have until the 13th of October or January or whenever to finalize your tax return. It just simply means that SARS is aware of the fact that your income tax is a little bit more complex than the very basic, simple third-party data. You might have a travel claim. You might earn commission, against which you want to claim some expenses. So there are a little bit more intricacies in your taxes. Nothing to fret about, nothing to worry about. So documents that you might, or that you will very likely need to start preparing. Last year there were quite a number of automatic assessments that actually were audited. There were a couple of other returns that were audited or verification. It happens sometimes because SARS is malicious, sometimes because the system picks it up automatically, sometimes it's just random. There's a myriad of different reasons for why there are audits, but at the end of the day, if you are selected for audit or verification, the information that you will need in order for you, or the documents you will need in order for you to submit to SARS, will be at least proof of your income, which is typically your IRP5, your IT3B, which is typically an interest statement from a bank that indicates all the interest that you earned on income or on investments, savings accounts and things like that. An IT3C, which is typically your capital expenditure or your capital income, capital gains and things like that. So your IT3B you typically get from the bank, ABSA, Nedbank, FNB, whatever. Your IT3C you typically get from a finance house, such as Old Mutual and Allen Gray, Investec, or not necessarily Investec, but you get the idea. It depends on your investments and which document you will get. So you're going to need your IRP5, your IT3BCs, your medical aid statement, if you are a member of a medical aid, a schedule of your medical expenses, if you had additional medical expenses. That schedule, if you want to claim that, should ideally include all medical expenses that you incurred for the year, not just only the ones that you want to claim. You want all of them for the year. And then if you want to claim a travel allowance, so you will need to finalize your logbook and any expenses that you incurred in maintenance of your vehicle, as well as recently SARS has been requesting an proof of ownership of the vehicle for every vehicle that you want to claim the travel allowance on. So quite a number of, if you have 3 or 4 vehicles that you want to claim on, you will need 3 or 4 documents. And from the top of my head, I think those are the most important documents that you need to prepare. If you have investment property, for example, a schedule of income and expenses relating to the investment property, and obviously that schedule, a basic income statement. If you have documents to support that in the background, to say that these are the levy statements, these are the invoices from the managing agents, municipality bills, those kinds of things, that will also help greatly. So that's me, quite a lot of talking. My throat is quite dry and sore now because I haven't done this in quite a while. My name, that's a bottle, but only slightly. My name is Jacques Taljaard. This is JJT Accountants and Auditors, our YouTube channel, and good luck with tax season, all the best, and have a great weekend.